volume died off very quickly. And I just realized I was off on a tangent there, so let me get back to the questions. I have a question regarding what seems to be a little contradicting detail between your trading plan and your DVD section 5 on counter trend trades. You know what? I thought I corrected that. I did have a cut and paste error in the trading plan that I didn't catch when I went back and edited the thing. Obviously, I mean, maybe it's still there. In your trading plan, you write, my rules for entry on a breakout trend continuation are, a candle must close outside the support or resistance line. This is okay and in accordance with the example, but then you continue, my rules for entry on a bounce trade, yeah, that is a counter trend trade, are the market must go through the support or resistance line. If the candle lower high is outside of the line, the close must be outside. Entry is no more than 10 pips from the high or low of the candle or at the 3-bar reversal point. This seems to be in contradiction to an example you show on DVD number 5, counter trend trading. Actually, that's just a little bit more detail. It's not necessarily a contradiction. It's just another way to get in on a counter trend trade. And basically what I'm saying there is, as price moves down, I want to see it push through. I want to see that there was momentum. I'll give you an example. I want to see that there was momentum pushing the market through a prior area of support, but then by the end of the bar, it closes up. Okay, that tells me that the momentum was completely turned around, and that just implies that there's more momentum out there. For example, over here, if I were going to trade a counter trend trade, I want to see the market pushing up, but then the fact that it's returning back into the channel indicates to me that there is more momentum pushing to the downside. Okay, so that's the key to understand there. The other thing to understand is I'm not trying to give you a boilerplate trading plan. The trading plan is something for you to modify for your particular style. What I gave you was an example of some of the elements that I use. Hopefully that answered the rest of your questions. Did I misunderstand something? Why is your entry at the common low of bars? Yeah, you're going to have to be more specific than that. Even though I recorded the DVDs, I don't have them entirely memorized. So if you want me to comment on the DVD, please let me know the DVD and the time that you're talking about. That way I can get there quickly and easily. Next question. You've stated in the daily video to not ask you about patterns on 15-minute charts as the time frame is too short. Let me clarify that a little bit, okay? The reason why I am so adamant about this and why I may come across very strongly is because it's very easy to get caught up in moves without having any perspective. Okay, if all you're doing is looking at the 15-minute chart, it would be very easy to get caught up in this move and thinking, man, you know, I should have got in back here, I should have got in back here, and I had another chance to get in over here, and I didn't. And now the market's moving up, and it's going to go up to, 320 again, and I'm not going to make any money. So you buy, and you buy in way up here, and now the market's way down there. Okay, it's moved, it's retraced way against you. So, you're down whatever, you're down 50 pips, 47 pips. With a little bit of perspective, going up to the hourly chart, you would see, okay, well, the market, look at this, it moved right into resistance. So I should be expecting at the very least a reversal over here, or if the market is going to break out, you'll see the market break out and then form a flag or form a pennant pattern back into this prior area of resistance. Okay, that's invariably how these things work. It was no different than what we just witnessed over here. We saw the market move down, and it formed a pennant pattern coming right back up into the resistance area.